Joining us right now, and what that could mean for buyers and sellers is Ivy Zelman, Zelman and Associates CEO. And Ivy, sounds like it's bad news for everybody all involved as mortgage rates push higher again.
Well, it's certainly not good news, but it's been interesting with rates now actually about 6.8% on a 30-year fixed rate. We've seen surprising resiliency in terms of volume. However, we're seeing a pickup in listings having to reduce prices and incentives that our builders are continuing to offer, predominantly mortgage rate buy downs. And the area of weakness that we're seeing across the spectrum would be more of the entry level, where the move-up market has been very strong and remains, I think, surprisingly resilient despite rates moving higher.
Yeah, I mean, the reality is we're still dealing with a situation where there's just not enough supply. That's particularly difficult for first-time home buyers. As you mentioned, at the entry-level price point for all of these things, it's keeping people from being able to buy homes. There's a huge backlog there. What's the solution to that problem? How's it get fixed?
Well, I think that the way that we think about the solution is that we need to see, that local municipalities, cities partner with developer builders to utilize land that's not out so far out in the rural areas that you can't have trades willingly driving out there to build homes. So I think it really has to be providing more affordable houses closer to the employment centers. And I think that really comes at the local government level. It's not going to be at the federal level. I know that Trump is talking about utilizing federal land, but that most of that land that's out west is really called third, fourth ring, even further out. And trades and prospective buyers are not going to want to drive. They'll spend more on gas than they would on their mortgage payment. Well, maybe not, but it's too.
The time factor too. Yeah, having to commute somewhere to a job. So if the federal government can't make progress on this, how optimistic are you about local and municipal levels being able to do something about this? How long does it take to get us back to what we would consider a more normal situation?
I guess I'm somewhat skeptical that it can come to fruition because, not in my neighborhood continues to be a big impediment. And I think that will continue to really curtail any likely significant improvement in building affordable housing. I know that there's some opportunities that have come to fruition in different markets in Seattle and Denver, but it's very small. It really is not enough.
I mean, we've all been a little surprised, I think, by the 30-year and the move higher for the yield there, the move higher for mortgage rates as the Fed's been cutting interest rates. Has that created a panic in the industry, or how do people plan and accommodate for that? We're not seeing lower rates like we'd anticipated, at least on the long end.
Referring to the builders or realtors?
To the builders, to the realtors, to anybody involved with this. I mean, this is a problem to try and tackle. We even see it playing out to a company like a Home Depot or a Lowe's. It's not developing the way they had anticipated, and that means everybody's got to have a longer-term plan for this.
I think they adjust. I mean, what we're seeing at least for the builders, they continue to use mortgage rate buy downs, kind of averaging 5%. In some markets, they're lower than that. And that's still creating volume for them. They're still selling homes, but they are providing that value incentive. And I think in the existing market, inventories are up, call it 20-25% nationally, but that's allowing for more pending activity to come to fruition. So we do have buyers back in the market. Remember, we have a very strong economy, and we're still seeing that result in more demand. And I think that everyone's adjusting. Affordability is still very stretched. For the existing home market, we're about 20% above trend line. And in the new home market, we're about 10% above trend line. So I think that the builders and realtors and buyers are adjusting. Remember, when interest rates were approaching 8% not too long ago, we did have continued demand. So I wouldn't be surprised to see the volume, for 2025, assuming rates stay where they are today, be in the mid to higher single digits for the new home market. And we actually expect a pretty good rebound in volume for the existing home market, given that it's at recessionary lows. So not getting back to trend line, but we do think price will be the factor that needs to be adjusted downward. And we are seeing markets where pricing is not only moving lower, but we're actually seeing pretty big reductions in list prices. So that's definitely going to be the lever.